Methodical. Most sellers manage their business based on the dashboard on the left, which shows gross sales of 1 million rupees. But the number that actually matters is the bank deposit on the right, which in this case is 350,000 rupees lower. This gap is caused by referral fees, logistics charges, and customer returns that often go unverified. Without a tracking system, these small discrepancies accumulate into significant revenue leakage that stays hidden in your settlement reports. The goal of this masterclass is to move past those dashboard estimates. We are building a system to account for every rupee from the customer's checkout to your final bank deposit. To follow along, you will need access to your Seller Central account, a basic spreadsheet tool, your business bank statement, and your GST portal login. Mastering this reconciliation process ensures that your financial records match your actual payouts, turning your accounting into a verifiable record of your business health. Step 1 is to stop using the Seller Central homepage for your accounting. That dashboard is an operational tool designed to show sales momentum, not the final amount of cash you are owed. To get the raw data, navigate to Reports, select Payments, and then All Statements. Look for the most recent settlement and download the flat file V2 version. This is the authoritative source for every transaction processed in that period. This timeline illustrates why your monthly sales never seem to match your payouts. Amazon typically pays on a 7-day cycle, meaning a single settlement will often overlap 2 different calendar months. Within that cycle, Amazon also holds back a portion of your earnings. This block represents the account-level reserve, funds the platform keeps temporarily to cover potential customer refunds before releasing the final payout. Because it captures these reserves and the specific timing of every transaction, the settlement report you just downloaded is the only accurate record of your actual revenue. Shifting your focus from the operational dashboard to this raw settlement file is the first step toward identifying exactly where your money is going. Open your spreadsheet and create a master reconciliation tracker. You will need these columns: order ID, sale amount, Amazon fees, expected net, and actual settlement. To find discrepancies, we use a simple calculation. Subtract the Amazon fees from the sale amount to get your expected net. Then compare that to the actual settlement amount listed in the report. You can speed this up by using conditional formatting. Set your spreadsheet to turn a row green if the numbers match, and red if there is any difference between your expected net and the actual payout. These red rows are your primary focus. They usually highlight items where a return or a delayed adjustment has changed the final payout for that specific order. Returns create a significant time lag. As this diagram shows, a customer might buy an item in January, but if they return it in February, Amazon maps the deduction back to the original order ID within your current settlement. When you expand that refund transaction, you will see 2 adjustments. Amazon charges a small refund administration fee, but they should also credit the original referral fee back to your account. However, there is one critical fee that is never credited back. If you use Fulfillment by Amazon, the FBA fees are kept by the platform, even if the customer returns the product. Resolving these red rows allows you to move from blindly accepting deductions to verifying every fee the platform charges your business. Now we must address the tax collected at source, or TCS. Under GST Section 52, the platform is required to deduct 1% from your net taxable sales. You can find the exact amount of TCS deducted by looking at the tax summary section of your Amazon settlement report. To verify this, log in to the GST portal and navigate to the GSTR-2A section. The TCS credit shown here should perfectly match the deduction recorded in your Amazon settlement report. Do not claim this TCS credit in your GSTR-3B filing until it actually appears in your GSTR-2A. If the platform is late filing their GSTR-8 return, claiming it early will trigger a tax notice. The final step is linking the total payout from the settlement report to the money that actually arrives in your bank account. Remember that there is a processing lag. It typically takes 3 to 5 business days for the funds to move from the settlement date on the platform to your bank balance. Match the total from the Amazon settlement to the deposit on your bank statement. Use the Unique Transaction Reference, or UTR, to confirm that the bank deposit and the platform settlement are identical. Completing this final tie-out confirms your records are compliant and ensures that every rupee released by the platform has reached your bank account. You now have full visibility into your net payouts. your records are GST compliant, and you have a documented list of discrepancies ready for seller support claims. This manual spreadsheet process works well initially, but it becomes difficult to maintain once you exceed 1,000 orders per month. To handle higher volumes, most sellers move toward automated reconciliation software. These tools use APIs to pull your data and match thousands of transactions instantly. However, automated tools require a baseline of understanding to be used effectively. Mastering these fundamentals is the prerequisite for scaling your e-commerce operation with confidence. To start your own tracking system, download the free reconciliation template linked in the description below.